Today joining us is Vikram Gandhi. He's founder and chief executive of VSG Capital Advisors. Vikram, thank you very much indeed for joining us. Okay, tough times ahead. Well, walk us through the hurdles, the challenges, and the economic obstacles that India is facing.
Yeah. You know, India's really in a rock and a hard place right now. You've got growth slowing down, and it's a combination of lower investment, both domestically as well as what's going on in the world now, which may change a little bit given the trends we see out of the U.S. You have high inflation, which again, there's been some trends of coming down, interest rates too high, a current account deficit, which is not being funded by foreign flows, and therefore pressure on the rupee. So all the kind of various aspects are all kind of coming together to create a really tough situation.
None of it seems to be good news, particularly apart from the domestic consumption side of things.
Absolutely, absolutely. And again, I think the economy, since there has been tremendous growth in the last 5-8 years, the economy needs to recalibrate a little bit. And the budget, while the budget is just one event in the year, I mean, the trend needs to be a focus on reducing the fiscal deficit.
Absolutely, and that's, of course, down to what they do in terms of tax authorities, notoriously bad tax collection, of course.
That is a big issue, and cutting expenses. I mean, the expense rates and the investment spending, so-called, in the last 12 months has got out of control a little bit. Now, will they be able to do that, given the coalition politics, etc., is questionable. But the fact is they should cut the deficit. It'll reduce inflation. It'll get interest rates down and recalibrate the economy to get it growing again.
Well, I mean, you're crying out private investment as well, private sector investment, when you have interest rates where they are right now, because, I mean, why would you want to? You can't borrow at those sort of levels. That's ridiculous.
Absolutely. So, it's like a great carry trade if you can do it.
Yeah, but then you get hit by a falling rupee. That's the danger, isn't it?
Exactly.
So when we look at that, how badly hit is corporate India by this interest rate regime, and what needs to be done? What would be your policy prescription?
Yes. So I think for interest rates to come down, fundamentally, inflation and the deficit needs to come down. That's a prerequisite. RBI.
Isn't inflation going to, is there anyway, it's almost structural now with it?
Not necessarily, in the sense that, as you get the economy going and there's more efficiency in the economy, it should come down. The key caveat there is oil, which, as you know, is a huge impact on inflation.
It's bad enough without that oil price.
Exactly. Having said that, though, I think the focus right now of the RBI, and as you saw, they cut the reserve ratio. Now, whether they cut rates tomorrow or not, who knows? But the trend is downwards, which is a good thing. And so they've dealt with the inflation issue. It seems to be coming under control. And so now the next trend is downwards. I think the other thing on corporate India is there's a big focus always on the central budget, etc. But a huge part of activity in India happens at the state level. And people kind of tend to forget that. The elections right now in the various states that occurred provided a very clear mandate to do things. And there, I would say that while big corporate India may be hurting on the headline side, at the state level, Indian entrepreneurism is alive and well. And I think that's actually a key thing that drives it. It's also the young population. I mean, for example, in Uttar Pradesh, which is the state that just had its elections, about a third of the people elected were below 30 years old. Yeah. There's that whole demographic, so-called demographic dividend, which gets lost. Having said that, the Indian economy has performed below standards.
But also we get this dithering. We get so much dithering. I mean, with, of course, opening up the whole economy to foreigners and FDI. I mean, look at the whole debacle when it came to the retail side. So yes, we will. No, we won't. Yes, we will. And then pulled it.
And I don't see, given what happened in this, where the central government is right now, the ability for them to actually do anything dramatic seems to be reduced. Having said that,
there is that old mindset still there that can't get around, the Nehruvian way of thinking about self-reliance, isn't it? So there is a seed still in people's minds.
That is true. That is true, and it's also there. It is kind of populism, though, in a way. But having said, it takes a while. And as I said, India's economy is performing below its potential. Probably always will. But that question is to what degree? And probably right now it's more below than the long-term average.
Okay, well, something needs to be done. I mean, we're fairly close to elections now. We're close enough when it comes to politicking anyway, so there's nothing going to get done until we have that.
I think it'll be much slower than what people would like. And again, I do, though, want to emphasize that the action at the state level that's where a lot of the grassroots decisions are, a lot of the grassroots investments are. You've seen some states like Bihar, Gujarat, and others that have, created a huge turnaround. And again, the headline on India is always focused on the center and what's going on in Delhi and policy, which are important, no doubt about it. But what's very encouraging in my view, which people tend to forget, is the mandate with which the states have been given to make things happen. And hopefully the state governments will come through.
And Vikram, what about infrastructure? I mean, there needs to be still a lot more spending to get rid of these bottlenecks.
Absolutely, huge. I mean, I think in the next...
It's not going to help the fiscal position, is it? That's the point.
I think the question really is, I mean, the trick is not the government spending it, but to get the private-public partnerships together. I think that's the big focus from a policy standpoint, and I think that needs to happen. And they expect to spend about $1 trillion on infrastructure, as they should, of which perhaps more than half would come from the private sector.
Last question, 5 seconds. Mark Santa, 10 for Manmohan Singh.
Politics is not my thing.
Very diplomatic and not at all political. Thank you very much indeed. Vikram Gandhi there from VSG Capital.